The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And of course, 24th of December, day before Christmas. I want to wish you all just a wonderful holiday. And certainly here at TFNN, I want to just give everyone a big thanks for everything and to say have yourselves a wonderful, wonderful Christmas day and with family and friends. And Steve, thank you for 2 great hours. Let's go straight into the marketplace. We've got the Dow up 40 at 16,344, all-time high. S&P 1831, up 3.91, all-time high. Composite up 2 at 41.50. Cannot be an all-time high because that was made in the year 2000 in March. The gold is up $4 at 12.01. You got silver up 0.03 at 19.45. Platinum's up 5 at 13.36. Copper is actually starting to show some much better signs than it had. HG. And it's about to retest the high that was made just the other day. So that's peak A. B, that would be C if it goes 1 penny above 3.3355. Actually, if it goes 0.001. And so far, the weekly chart is also improving. So that is a very, very important factor. And in looking at the bonds, just want to do this here with the TLT. TLT has just been stuck in the trade range, holding the 102 area. It's at 103.11. Doesn't look too great, but we're going to see how it tests 102 over the coming days. If it breaks 102, that starts leg D to the downside in the monthly, and that's going to be really important to watch. And yeah, we're going to the dollar DXY. The dollar itself is holding the 9-period exponential moving average in the EUR-USD, which is the euro-dollar currency pair. It's got that H pattern, has made a peak D. It looks like it needs to do some testing, probably closer to the 1.364 area over the coming days. And now we'll also look at the USD-JPY. And that is, in fact, everything about it says there should be a new recovery high made above 104.259, and right now it's at 104.295. So let's go to something. Quick question in the den. Could I look at Facebook? Absolutely. Facebook right here. Facebook, FB is the symbol, trading at 57.34. Hit a high today, recovery high. Actually, I say recovery high. It's an all-time high for Facebook. That's E. I think we're getting a little stretched here. Everything about my charts say that within the next 3 to maybe 5 sessions, we could be making some kind of a top. Could rotate so it goes a little longer than that, maybe into the first week, and maybe even the first week or two of the new year. But in the meantime, straight up move, peak A, B, C, D, either recycled to a brand new leg A, but I'm calling it E for now because the MACD is at 92. It's very good. Sorry, the MACD is very strong. Stochastics at 92. On balance volume says be a little careful here. And if there is any testing, 54.86 is the 9-period exponential moving average. That's going to be really important in the short term to monitor. But meantime, leg C in the monthly chart, that's very strong. Leg E, I'm calling it in the weekly. Oh, I never did the daily, the 120-minute chart. We'll do it together. This is going to be peak A, B, C, D. I believe that's a D by 1 penny. So that's 47.21, 47. Oh, no, it's not. So here it is by 1 penny. D. And then I think it goes E and F. I'm not going to call that A to B. Let me just double check. Yeah. Didn't break. So there. Okay, this is what I've got right now. Calling it E to F. It's a brand new start of a buy mode. A, B, C, D, A, B, C, D. All right, we're in D in the 120-minute chart. That's going to be a 1, 2, 3. That's going to be not an instant restart. It's going to be a brand new. There you go. Okay, so leg D in the 120-minute chart. Leg E in the daily, I'm calling it E for now. We'll see if it recycles, but that's E for now. Okay, the question really is, this particular trend line that I drew in some time ago, it's been pierced, and we'll see if on Friday on the weekly chart it closes above, if Facebook closes above 5605. 5605. If it closes under then that's saying that this particular trend line here has some significance. As it stands right now, the MACD is at a much lower level than it was at peak D when it hit 5460, 5481 back in the week of 25th of October, and the stochastic is much lower down. So it says, be a little careful here. Facebook, yeah, it could go a little higher. I'm not sure that it can go much higher, but right now, without a little bit of a break, a little bit of a regeneration of energy, and my eye says at 57.34, 56.55 to 56.20 will be the key support level. If it goes under that, then it's going to be more than 1.5 days of consolidation. Could be 3 to 5 days of consolidation. Okay, a question I had earlier is, could I just quickly show the daily and the 120-minute charts to show the Chapman wave count. So QQQ right now trading at 87.37, made a recovery high, about a 12-year high, or an 11-year high, and at this particular point it's in D with the gap up, and it's in the daily. The weekly I've got as F. It could recycle, but at this point it's hitting resistance. It's in leg F. The monthly chart is in leg E, and the 120-minute chart is in leg D with a potential doji forming here. So here again, I think that we're getting really close to some kind of a breather. Let's call that a breather. Looking at the IWM is in leg. I think this is recycled to leg B. I really can't. There's no other legitimate count for it, so leg B says that it can go much further than the 120-minute chart, maybe going into Friday or Monday. But it's leg D, very strong leg D in the daily chart, with stochastic at 86%, the MACD good, and it's in leg F/B in the weekly, and leg E with very strong resistance coming up in the monthly chart. Round about in December, it'll be 117.03, and right now it's at 115.28. Let's go on and we'll look at the Dow. Was that the diamonds? I think they went to the DIA. DIA, not DIW, DIA. That is in leg E/B daily, F/B weekly, D in the monthly, and D in the 120-minute chart. The SPY is, in fact, in leg F/A in the daily, E in the weekly, D in the monthly, and D in the 120-minute chart. I think I've covered them all. Let's go to Garo in Newport Beach, California. Garo, how are you?
How are you, sir? Good morning, sir.
Good morning. I'm good, thank you.
I'm calling regarding PXD.
That
I'm
is
short for,
Pioneer Natural Resource Exploration Producer, Oil and Natural Gas. So you are doing what?
I'm short for 3 days. That, of course, I do day trading. I don't hold it for the following day. And 3 days ago, it gave me a red arrow, which was a rejection of the price. From there, I'm short. I want to know at what price should I get in, or where do you think this will roll up?
So right at this moment, are you still short?
Yes, I'm short at this time.
Okay.
Yes.
So what I'm looking at here on the 120-minute chart, the 182.25 level shows that that's where support is, and I'd be between 182 to 182.70 to 182.50. Watch it closely, because if it powers through that, and the 10-minute chart says there's a chance that it could actually do that, if it powers through that level, let me just quickly do this here. So that's D. Just want to finish the 120-minute chart with the Chapman wave notation. That's D. Is that E? Okay, give me 1 second. There it goes.
Sure.
So that's E. Oh, that's going to be interesting. So that's... Okay, so that's an instant restart. Okay, A, B. I just needed to double check something. All right.
Sure.
So here we go. It's 182.87 is also the 200-period exponential moving average. But the way, I don't have to tell you, but the way this picks up speed either to the upside or the downside intraday makes this a fantastic stock for intraday trading because it gives you a lot of points very quickly. So my thinking here is that at 183.45 down $1.76, if the market tends to weaken towards the, we're going to have a short day today, 1 o'clock. So if between 12 o'clock and 1 o'clock, the market starts to weaken, there's just a really good chance that this will go quickly to the 182.70 level. I'm going to recommend that at anywhere in the 182.70s to 182.50, if it does that today, that you take, I would take off pretty much 2/3 or more of the position, and at the close, you don't like to hold overnight, right?
No, sir. No,
so
I would be.
I would be out completely by the end of the day. Now let's just talk about it in terms of a reflex action to the upside. And if that's the case, then PXD. The question would be right now, if the market is going to have a little bit more strength, what would PXD do right now? And as I'm looking at it, the most important thing you want to see is 183.22, the low of the day. You want to see that taken out, and I would say you want to see it taken out within the next 20 to 30 minutes. I'll explain why. Because the stochastic's at 19% and the MACD is still just a little bit positive, there's some internal strength. And when this thing starts to head down, usually it has a bunch of red bars because it just doesn't hold support. When it rallies, it has a bunch of green and very little red because it doesn't like to stop once it's got a little momentum. So as I'm looking at it now, I'm seeing weakness. I would say on a short-term basis, if it popped to 183.98, between 183.98 to 184.10, I would just take my profits. I would just be out of it. But as I'm looking at it right now, I would like, for your instance, I'd like to see it break 183.40 in the next 10 minutes to 12 minutes. And then I think it'll start to test the low of the day. But in the meantime, you've got a great entry point. I just wouldn't give any profits up if it started to bounce more than 50 cents. So I hope that helps you, Garo. And I'd like to wish you a Merry Christmas and a wonderful day. Thank you so much for calling.
Thank you, sir.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We are back, and Dow's at 43, S&P's at 4.46. Interesting. Dow's at 0.27, S&P's at 0.24. I usually like it the other way around. I like the S&P 500 to be slightly stronger, either up or down, than the Dow, and then you have more synchronicity. I was asked yesterday about the book I was talking about called No One Would Listen, a true financial thriller, the Madoff whistleblower, Harry Markopolos, who authored it with David Fisher. I did finally finish the book. Actually, I did. I read it very quickly. I think it's excellent. I had an experience over the weekend. Friday night, just before 6 o'clock, I had to send an overnight envelope that had to arrive by 12 o'clock Saturday. Got to the post office in time, had everything done, sent it, made absolutely sure that it was clear as anything. Made absolutely sure that I checked off the part that says, and signed the part that says no signature. I've used the post office for years and years and years for overnight. I never have had a problem. It's usually very, very good. And United Parcel Service does a good job, but I happen to prefer the post office because they get it there by noon most of the time to where I need to send packages and things. And I check online on Saturday, and what does it say? It says 928. It went to the wrong zip code. Within the area, but the wrong zip code. I say to myself, wait a minute. I double-checked the label. I made sure that the address was very, very, very clear. Absolutely, the zip and everything was very clear. And it says that it went to the wrong, either the address was incorrect or the tracking station was incorrect. And I'm saying to myself, wait a minute. They ask you to put your telephone number down, and they ask you to put the recipient's telephone number down. Surely, and it's guaranteed by noon, or they give you your money back. So surely, you've got everything in place. A red flag goes up and says, uh-oh, we're going to be late. So what would be the first thing? Every single mail carrier that I see around you, just like every cop that I see, has a cell phone. Everybody's on their cell phones. So even independently, you could have someone just pick up their cell phone and say, uh-oh, problem. We've got your envelope. What would you like us to do? Obviously, the answer would be read the label, which is perfectly correct, and get it there by noon. Do you know that it took until Monday afternoon? It might have been yesterday. What's today? Tuesday. Yeah, Monday afternoon to get there. It had incorrect information all the way through the weekend. And I'm saying to myself, you know, for the simplest thing, this is exactly like Harry Markopoulos sending documented evidence to the SEC over May 2000. It goes on and on and on. It starts off where they figured out that Madoff probably had 5 to 7 billion. By the time the SEC, well, they didn't do anything. They still, to the day of the hearings, were claiming that there was nothing wrong that they did. So it went to 68 billion or more. And I'm saying to myself, wow, bureaucracy. When you forget to think for yourself, that's what happens. It's just a terribly sad thing. So it was a very important envelope that should have arrived. It didn't. How do you explain these things? I'm not interested in getting the $20 back. It takes a split second to make a telephone call. So as I'm reading the book, finishing up yesterday, and all this is going on, I'm saying to myself, wow, it's just bureaucracy. And it's that nobody wants to take responsibility for saying, hey, there might be something here. Let's just investigate it. Let's just do something. So I thought I'd get that off my chest. So let's go. The IYT, which is the transportation index, leg D in the 120-minute chart, retesting the previous high, peak F. The daily chart was a peak E back and at 130.78 on the 2nd of December, and today's high is 130.94. So it's gone a tad higher. I'll be right back, and we'll continue looking at the different indices, and we'll be looking to see what would turn the market down and what would it take, and we'll look at.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back, and oh, thank you. That was just a nice message from Mark in Maine. Yes, Mark says, Basil, the district manager for the postal district who screwed up would want to look into your issue and make sure it didn't happen again. Yeah, I spoke to some very nice people. That's not my complaint. And I think it was just the silliest thing that they could have got to it really quickly. And I know that I get to the post office and people grumble and grumble while there, and I also kind of mumble and grumble because sometimes things take so long, and everybody has their own specific thing to do at the post office. Nobody does the same thing, and that's the issue. So it's really personalized service. That probably is the issue. But and because I've had a lot of success with them in terms of time and deliveries and things like that, I can understand something goes wrong like this once in a while, but it was very frustrating, and I will be following up, and I'm sure they would like to correct whatever the problem was. So let's get back to this. So now I'm looking at United States Steel X. We were in it, we were long, took some profits, and we took some tiny losses, and that was dumb because I'm the guy that said aluminum and steel way back. Thank goodness we still have our aluminum stock doing very well. But that steel sector is telling us that the economy is strengthening, that there are some very good things going on right now. So it's in leg D in the daily. I just didn't want to dive in here in leg D. I just don't do that for my subscribers. Even the stochastics at 87.41. And I could have, in fact, started a small position at the open with the bigger position coming from lower down. I just didn't want to use up too much firing power. Maybe it's a silly thing that I didn't do that, but that's the way it is. Now, it's going to be tougher, but you know, you got to do what you got to do. The other thing that's quite important is that when I'm looking at these different charts, the fact that you've got the rotation, including certain sectors that were very poor and that are now very strong, I think that speaks to the determination of fund managers and probably the layperson to be trying to choose what hasn't moved very sharply yet, especially if they actually have something that's moved very well, by saying, I still want to participate if my good stocks start to pull back, because these former weaker stocks that are moving could move very nicely. Now, here's another one that we missed. We had dries at 3.63. It's trading at 416 right now. This could be leg F. It could be a brand new leg B. Did the homework, did the analysis, did everything. Lost 10 cents twice. 348 once and 363. It's upsetting. We did make some money at some point, but I did the analysis. But there are those moments where the market, as you're testing something, in this case the 9-period moving average, that's where you want to put the greatest weight of your analysis, because if it closes under something like that, that it's held all the time, then it could be a quick move to the downside. That's one of the reasons why I put the stop there, but it was probably too tight. Why? Because, in fact, it was 10 to 15 cents down, but it was 30 or more cents to the upside, because the target was at $4 and then $4.34. So I just wanted to show that sometimes you do all your homework, but that emotional part is what you got to try to avoid. I've tried to avoid it. We've had some success in avoiding it, but not always. Now, when I'm looking at the shippers, I'm saying even the fact that the shippers are starting to move is telling me that there is some economic strength, national and international economic strength. Question of the day, would I look at WPRT? WPRT is Westport Innovations, Inc., trading at 19.15. Now, the doji candle that was formulated last week, because there's a higher low bar this week, this actually starts with a gray A. That means a bounce A in the weekly chart. Nothing yet in the monthly. Still leg B to the downside. But the daily chart definitely. Now, the question I should have is S&P in the den. Do you have any position at all? Because if you don't have a position, this is the first bounce after a pretty major sell-off. So you would anticipate normal thing after a sharp move is that the first bounce, just like this bounce right here that was made in November, failed at a leg A-, starts back down again, and if it takes out the left side low bar, which it did, it could have quite a sail to the downside. And this is exactly what it did, and it's gone to E. I like this particular setup right now. So at 17.55, if you are in just a tad off the low was 17.07. That is fantastic. I'm going to say, first of all, congratulations. I don't know what your technique was, but it was a great technique to enter. What I'd be doing right now is 1878 is the 9-period exponential moving average. If it takes that out, then you have to be a little bit careful, because 18.30 is the low bar of great significance. If that is taken out, then the candle, the first takeoff candle of the 20th of December, no matter what happens, that has to become a springboard for a move to the upside. The best scenario I can see right now is that it holds 19, and by Thursday afternoon to Friday is trading just a little higher, somewhere at 19.33. The best case scenario is that by Monday to Tuesday of next week, this thing has cleared 19.86, has closed in the 19.93 area or higher, and starts to tackle 20.84, which is the 9-period exponential moving average. Great entry. I like the fact that you got in just as it turned off the low. And what I'm saying to you is that this is the first time that I'm looking at it, and the sign. I think I had a question about it last week, and I said not yet. Now I'm looking at it and I'm saying, oh, okay. First sign of strength is stochastic made an H bottom, and it is turning up, but it's only at 7%. That is like the stochastic at 93%, very positive. In this case, it's still very negative. And the MACD is going to take a long time to work its way up. So you have to do it through the daily chart. Daily chart should make a peak A. 86 was the high yesterday. 85 is the high today. So that's a peak A probably today. I want to see leg B, and I want to see leg B go to the 19.89 to 19.93 level. That will say to me, you have a fabulous entrance. This is the first time that you can see a 1755, a 60-cent potential loss, as opposed to about $1 from your entry point 75. So 3.350 to a 450 gain. So a 1, call it a 1.5 to 4.5 potential risk reward, and that is fabulous. So I'm looking at it and I'm saying, if it does take out on the downside 1877, I'd be a little bit careful, because now the momentum that it just gained, it's starting to lose, and I don't want to see it lose that. The 120-minute chart, it's just a little deep, but it's already turned back up without hitting the 9 EMA. A good sign so far today. Hey, nice entry on WPRT. Question, does you think we will get a down day before end of the year? Peak D, I know that you're being kind of coy there. Will we get a down day before the end of the year? I think we're going to get a down day, and the surprise might be that it's just one really sharp down day, and then the market tries to get back and maybe doesn't get to the high that was made by the 31st of December. But as I'm looking at it now, the real question for me is, I have some alternate counts. I'll be doing a lot of work tomorrow. I'm going to be assessing whether this is a move of such substance, because we've got the home builders, the home building sector, we've got the shippers, you've got the rotation away from Ford into General Motors, you've got the aluminums and steels, and I'm saying to myself, will this rotation give such support to weakness that in fact the whole of January we don't get a very sharp move to the downside? Or is it, as I suspect, and I'm just going to jump, if you don't mind, to IBB trading at 225.37, having made a new all-time high yesterday, and I'm going to be monitoring how the very best sectors are holding up, and what I can anticipate would lead us to the downside. And I'm going to include right now the VIX index, which is at lows, a couple of week lows, but the 1199 already is the area. It's at 12.64. A very poor weekly chart. If the low of 1199 if it's taken out, 1183 is next. If we start to trade in the 11s consistently for days, that's an entire week, I'll be looking at this and I'm saying, be very, very careful, because that's buying pressure. And as long as the rotation is alive and well, we can see certain sectors continue to move up quite sharply. Okay, I'm serious, not quite, very serious. TLT sliding. Yeah, TLT is sliding. That 102 area is going to be very critical. 102, 11, but 102 really is the key number to watch. Most importantly is that VIX index made that H pattern, had the spike to the upside, went to peak D, and now is pulled back from peak D. And that's just saying to me, there is so much buying pressure at this particular time that any sharp resolution to the downside has to be accompanied by the VIX index participating, in other words, in the counterpoint. If the Dow was to pull back 160 to 190 points at any stage over the next few days, it doesn't mean a thing if, I can't say if you don't test the swing, which is the VIX is 1675 high, but if the VIX doesn't even get to 14.63, up 2 points in a move like that, then this is going to be, I'm looking at this and I'm saying, pull up the monthly chart. Actually, let's go to this monthly chart here. Pull up this monthly chart, and in a very, no, that's not the one I want. This is the one I want right here, not the SPY. Whoopsie, many mistakes. There it is. This is the one I want, and show how this particular pattern has never failed to reverse at that channel line resistance. It's tested it before at peak D back in July of 2007. Pulled back and they went on to the October high, which was underneath. I don't know if we're going to replicate that by having a very sharp pullback in January. I do mean a sharp pullback. I mean a sharp pullback that takes the S&P from the 1832 area somewhere into the 1730s. 100 points is 1,000 points in the Dow. And then has a big spiral to the upside to an E and maybe an F into the April period. I just don't know yet. That's the work I'm going to be doing over the next week. But in the meantime, purely on the channel basis, the repeated channel, this is the third channel to the upside. Third time you've got two buy modes to a D. This is two buy modes to a D and then an E. The one to 2003 was at 1552.87, reversed. 768 was the low in October of 2002. Screams up to 1576, October of 2007. Comes down very sharply, 52%. 666.79 was the low of March of 2009. And now it's screaming to the upside. If you look at that 7-year cycle, that takes you to about April of next year. So that's what I'm looking at. A couple of things I also wanted to mention just before we get to the break. My service is the opening call. It's a very comprehensive service. Every day I discuss all these different techniques. I discuss this particular chart right here, the Dow. I type up a report right inside there. Then I type up another report to go with this particular page. I discuss, as I did into this morning's, before it got sent out, how, in this particular instance, from the low of 15,703, you've had 3 doji candles, but only white candles, very strong candles. That's very positive, especially with the stochastic at 94% and the MACD expanding. So far, I have to say any pullback makes the 16,174 peak D top back in November the 29th of this year. Very important. I'll explain it as I come back because it's a Chapman Wave cup and ladle breakout. I'll be right back. Dow's up 49, S&P's up 4.58.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Now, one of the frustrations of this market, I'm going to do a couple of things real quickly. I promised that I would look at the flat-based restart and IBM, and thanks for in the den for reminding me about that. But the other thing is, in trying to enter stocks at this particular point, I have tried to avoid paying up. In other words, I don't want to buy a gap up because it just doesn't give me quite the risk reward that I'm looking for at least for my subscribers. At the same time, once in a while, there's a stock that I want, and I'm saying, I want it now, because if it moves away from me at this particular point, it's going to be too high, and then I'm not going to be able to get in. And if I buy some of it now, it's the stock that I would also like to add to. Now, I had a frustrating thing today. There are 3 stocks that we have, and all 3 stocks moved. 2, in fact, moved really sharply. We didn't get them. They didn't pull back to the entry point, and they just moved higher. So it's telling me, number one, good pick, good eye, lousy execution. And at the same time saying, oh, lousy execution, I didn't want to pay the high of the day as it opened up, gapping up. I wasn't to know that it was going to continue higher, even though I had a higher projection. What I'm trying to do now, as I'm going through it, because I'm not in any rush actually to pick up a whole bunch of stocks right now. They're just going to be the right sectors, right stocks in the right sectors. And now what I'm saying is I now have a test of what's going on. They are successful stocks. Those are good picks. But at the same time, now I can say, okay, if there's a stock that fits the category that I wanted, I'll buy it here, but I'll make it a smaller position, and we will add to it with a slightly bigger position on a pullback to where I originally wanted. So it's giving me a sense now that I don't necessarily have to chase, but if I do want to chase because it's a stock that I want in the portfolio because of the mix or whatever, then I will start a smaller position and then add to it. So that's that. Now, the other thing is, I think that we will get the question that Dan Peaky asked, do I think there'll be a down day before the end of the year? Thursday. I think Thursday is going to be a down day. That's the way I'm looking at it right now, Thursday into Friday. And IBM is just a little toppy right now. 183 was the 183.22 is the high. Is peak leg E. It's going to be peak E probably in the 120-minute chart. It's at 182.95. Just a single leg A. It's actually a B, but it's like a single leg A in the daily. But it's the monthly that I wanted to talk about. There was a pattern that I talk about very often, which is the Chapman wave instant restart. I won't go to the CD now. Maybe if I remember on Thursday, I'll start off with the CD and I'll talk about that technique that I use. But in the monthly chart back in July, it went to 185.63 and then pulled back for 2 months. The third month broke out to a new recovery high. That's one of the techniques to use, and it held the 9 EMA. Then it goes peak ABC, pulls back sharply, and it goes to D. Well, the action from peak A to B was the clue that I typed in months and months ago. It might even have been a year ago, that IBM was potentially making a flat base restart. And what that says is that you will go higher, but at some point you will go to a peak D or an E, constantly coming back, but never back to the most important support level, which I showed here, which in this particular instance was 177.06, where it went to 215.90 to make peak E in April of this year by having a lower high bar. And then what does the flat base restart do? It takes you underneath the base, and then it starts to move back into the arch, which is what IBM might be doing. It might be done, at least in the intermediate term, with the down move, and now it's making a move to the upside. That's important because it's part of the rotation. Hey, have a wonderful Christmas, everybody. Have a great day off, and I will see you Thursday. Thanks to everyone here. And
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.